Let's turn to the currency front because we're watching the Japanese yen. It's declining against 16 major currencies. Some political changes in Japan, but perhaps something else at work here. Sara Eisen's watching that for us.
That's right. It could be actually the beginning of a long downward spiral for Japan's yen. And that's what I'm hearing from traders and analysts. Two key factors playing into the trade today. First, Japan is regaining some of its traditional roles that it used to take before the crisis. The first role being a safe haven currency. Now, we know that traders buy safe haven currencies during times of financial stress. The dollar is also one of the traditional safe havens. So we see some safe haven buying here this morning. Also, traditional role of the carry trade funding currency. Now, this is when traders buy higher yielding currencies like Aussies or it's been euros, and they sell the Japanese yen as a carry funder. We saw the dollar replacing the yen in the past year as the carry trade funding currency, and now strategists are saying the yen is looking more like the carry funder. Greg Gibbs of RBS saying this morning that he feels very strongly that the yen will reclaim its carry funding role here in the forex market trading.
Yesterday, we heard about the departure of the finance minister in Japan. Today, we find out who's now at the helm, Nato Kan. Any impact from the political change-up?
Well, the yen continued to weaken on the announcement of the new finance minister, Minister Kan. Bank of Tokyo Mitsubishi putting out a note saying that this is likely to shift the yen policy from a stronger yen to a weaker yen. Now, the yen is still at historical highs. It's off the highs that we saw last year, but it's still high by most standards. And a lot of that is attributed to the former Prime Minister Fuji. He advocated for a stronger yen. Now they think that's going to shift, and that could really put some long-term pressure on the yen here going forward.
All right. We will continue to watch it. Thanks so much, Sara Eisen, for bringing us that.